Patriot Radio News Hour, Joe and Jason on this Monday, December the 4th. I hope you had a good weekend. You know, we had record prices. Stocks were, well, they're high for the years, close to all-time highs on a few of them. Gold hit an all-time record high, it's been a crazy day. Started last night into today. We've got Christmas right around the corner. We're going to get jobs data this week, right? Wednesday, Thursday, Friday. Big layoff announcement out of, Spotify, laying off 17% of their workers. There's all this stuff to talk about. We got the war. The Israeli war is back on and going into all of Gaza now. And we were waiting on Congress, right? Getting ready to leave for Christmas. Man, they really want to spend more money before they head home for the holidays. But before we get to all that, we got Joey joining us, my son Joey from Northwestern Mutual. I told you the benefits of being with them. Right? Number one, they're not a bank. That's a huge benefit. Number two, they're not on Wall Street. They don't have a stock price. No, they don't want to deal with that. They're not beholden to shareholders. They're only beholden to the people that work with them. And when all hell breaks loose, right, they're the one company that said no thanks to everything. But Joey, it's the end of the year, and everyone, like I said, it's Christmas time. We got all this stuff going on, the holidays, who's coming into town, who's leaving town. But you've got to prepare. And one of the things people really neglect is this is the time when you want to get ready for tax stuff for coming into 2024, right? You may want to, who knows, maybe you have huge capital gains. You want to take some losses on stuff, or vice versa. Or maybe, hey, you know what? You may want to sell some stuff, add to your income a little bit because you really didn't make a whole lot. Social Security didn't pay you a bunch. But there's a lot of things that you need to make sure you're doing. And it comes at a big reminder. Last week, the IRS sent a warning. Now, I don't know how they send it. I guess they post it on their website or something. Maybe, you know what, instead of this national alert stuff, that waste of time, that big test, Homeland Security, everyone's buzzing your phone. Maybe the IRS should buzz your phone. Hey, by the way, we want all of you taxpayers to know that we are ramping up the hiring of tax enforcers. See, it wasn't about customer service? No, of course not. The IRS says it is hiring and hiring big time, especially when it comes to the tax enforcement side. And here's another reason why you need to call Joey. The IRS now has decided we're not charging you enough. We're not charging you enough for underpaid. So a lot of gig work, a lot of people out there, you got to take an estimate at it. They used to charge you 2%. All right, that's 2%. It's not great, but it's doable. No, that's gone, Joey. Now the IRS says, hey, all you underpayers, new penalty, 8%.
Yeah, I mean, it's the way the government is going to come back to you to try and get their slice of the pie, but it's absolutely wild. We're already almost entering the new year. We got Christmas coming up, and it's the busiest time of the year for everybody, along with all of these crazy things going on in the background in our lives, from potential war to all this political background noise. And the biggest thing coming into the year end is making sure we're being tax efficient. And like you mentioned, Dad, the IRS is cracking down the whip. They're going to make sure that everyone's paying and find a way to collect as much as possible. And with our clients, we're meeting towards the year end to get a game plan in place, whether it's tax loss harvesting on your account, converting taxable dollars into non-taxable dollars. For grandparents out there, finding ways to fund for their grandkids' education. You'd be surprised to know tuition for colleges has outpaced inflation year over year, and it's an obscene expense that kids are just graduating with more and more debt, hurting them and putting them at a downfall as they graduate. So with all of our clients, we're making sure how much can we contribute to our accounts? What are some tax deductions we've been missing on that we should be taking advantage of? And are there any other areas of planning that we can execute on going into the new year, and just making sure everything is tidied up and we've got a game plan in place, knowing that we can tackle this next year strong and make sure we're doing it from a tax-efficient perspective, which is the main thing we want to make sure we're solving coming into this new year. The other side of that is making sure we're buttoning up everyone's entire plan, whether it's reviewing your retirement package for your employer, do you have pensions, your 401k accounts, and just making sure we're restructuring things. Now when we go into the new year, we're playing some defense, but we're also reaping the rewards as the market starts to come back, or as we enter a little mild recession here, depending on what the Federal Reserve does.
Yeah, and this is, this is free money, really. At the end of the day, the amount of money people don't take advantage of and end up paying extra money to the federal government in taxes that they should have, they didn't have to pay. This is kind of what we're talking about here. Saving yourself a bunch of money out there just by going with somebody who actually knows what they're doing. We'll be right back with more with Joey. Stay with us. 800-951-0592. That is our toll-free number. Joe and Jason here on this Monday. We have my son Joey with us from Northwestern Mutual. It's just kind of ironic. Joey's like, hey, Dad, we got to talk about taxes. And the IRS last week letting everybody know, hey, I know we told you that we just wanted to be better. We wanted to answer your phone calls faster. That's it. And don't worry, we're only trying to tax the rich guys. Here's the problem. There's not 87,000 rich guys in America, right? Heck, there's not even, I don't even know, maybe in the U.S., what are we talking about, 50, 75 billionaires total, right? The Forbes 400, I don't know exactly where the billionaires stop, but, we've got, 100, or so billionaires, maybe 10,000 people that are, making multi-million dollars, but that's about it. But don't worry, we need 87,000 because they're coming after you. And Joey, it's all about planning, right? It's planning for taxes. You're going to save money, period. 1%, 2%, 3%, sometimes even more. When people just do some simple things, the same rule applies when you're talking healthcare, right? Planning on. It's really the same thing, because what do you plan your wealth on retirement. Right, you're like, hey, I'm putting my 401k, I'm doing the matching. Joey's telling me to invest in this and that. I'm doing all those things, but same thing goes for healthcare too, right? You got to plan for when you get older, and unfortunately, too many people want to plan after they're older. That's kind of a hard part because all of a sudden now, whether it's dementia, strokes, heart attacks, now everyone got all these shots and getting all kinds of heart problems and all these things, long-term health care, all of these things can be done all at the same time.
All of these things can certainly be done at the same time, but the most important thing is they all fit together and come together into one cohesive plan, and there's a lot of pieces to the puzzle. We just want to show you how all these pieces come together, how it can make you more efficient for every aspect of life. But a story I wanted to share was a couple that came in a couple weeks ago, clients of mine in their 60s. So they had done a fantastic job of saving, $1 million 401k accounts, and they had a solid retirement plan in place. So when they had come to us, They had no dollars growing tax-free. They had a couple of accounts, and we've never asked them to save more than what they were currently doing. All we did was take a look at their current plan and made it more efficient. So this year we did Roth IRA conversions, and we did some tax loss harvesting to decrease their tax bill this year and help them with 529 contributions for their grandparents, for their grandkids, to start a college fund for them. And they were super appreciative because they walked out of that meeting knowing that they already saved 3 to 5% on taxes this year alone, just 1 year into our relationship. And we've developed a plan so when they finally walk away from an income and truly retire, that these buckets are going to spin out the money they need to live on, and they're going to do it paying the least amount of tax possible year to year moving forward, as well as planning for long-term health care. The biggest scenario where most people file for bankruptcy or they have to go back to their kids to help them live is going through a long-term health care expense, whether it's assisted living for 6 months or 2 years. These are things that are derailing families in America, and it's just a disaster of a story to hear, and I'm sure everyone here listening has experienced this. And everyone's logic is, hey, I can fund into a long-term health care policy, but if I don't need it, all of that money goes away, and it's an expense. There is a fantastic way, we call it a hybrid plan, where one, you get a life insurance death benefit. You can use that tax-free for long-term health care expenses, as well as a bucket that's growing at 5 to 6% year to year tax-free that you can utilize while you're alive for whatever you want. And that fits into your entire plan because now you have a safe vehicle growing at 5%. You have it growing tax-deferred and tax-free. So you're not going to pay the IRS anything when you collect from that. And you have a bucket of money set aside for long-term health care planning. There is no other vehicle out there where you can solve 3 problems for $1. So this couple in their 60s, they now get to go on vacations. They go on a cruise every 2 months. They need the money, we send it to them. You know why? Because we put a plan in place and different buckets they can draw from if they need extra cash month to month, depending on vacations and things going on in their lives. And that's just one of the many clients who's impacted this last year. And they're super appreciative. And I actually got a letter from them a month ago. And it just speaks to the volume and the work we're doing. And to all those out there, we've got these big accounts. We feel like we've done a great job of saving. We just don't know how we're tracking for our retirement or how much we can live off of. And we don't know other areas we can be more tax efficient. You should be reaching out to us, and you should reach me at my personal cell, which is 602-909-9048. Again, that's 602-909-9048. Please just shoot me a call. If I miss it, leave a voicemail or text message, and we will get back to you right away. But I'm urging everyone, as the holidays come up, we are all busy. We're only going to get busier year over year. We need to make sure we carve out time for something that truly matters, which is our financial plan that allows us to go on vacations and have these fun holiday times with our families, and let's alleviate that financial stress and financial burden you've been putting on yourself and help you get a game plan in place and help show you ways you can be more efficient with every dollar you invest or save for your future.
Yeah, and and you're bringing up such a great point, which is you did the hard part, right? The hard part was being able to save and not have to use it. We're going to do a story today. And this seems to always happen as when the economy starts slowing down, people start talking about recessions and rate cuts. You start to see these huge jumps up and people having to tap their 401k for emergencies, their Vanguard 401ks, their Worth 401ks, because they're out of money, and now they've got to spend it. The hard part is resisting that kind of stuff, and And really now that you've done that part, it's like, okay, now how do we use it the most efficient way possible? How do we give the least amount to the government? How do we prepare for things that we don't like to talk about, like long-term care? You know, the plan that Joey was talking about, that's exactly what I do. It's exactly how me and my wife are planning, growing money while at the same time having a death benefit, having long-term care, doing all those things. It's a great way, once you've done the hard part, to make sure everything gets done right. And like you said, Joey, the best part is, and then you start sending them money as they need it once they've retired, distributing that wealth in the most tax-efficient way possible as well.
Yeah, that's the most important thing, and it's the hardest part about the planning is how do you distribute your wealth most efficiently, and how do you stay true and disciplined while you're retired? So the average investor is emotional. They look at things and they sell at a loss, and they operate in a weird manner. But we're making sure we're taking a disciplined approach. You've already done the hardest part, which is saving. How do we help you devise a plan to distribute that wealth, but most importantly, how do we preserve it? How do we make sure that money is still there year to year? How do we make sure we leave something behind for our loved ones? These are all things we're thinking about or making sure we're planning for. In the long-term health care, listen, I'm in my 20s. I already have planned for that. Everything we do with our clients, I'm doing myself. It's a proven strategy, and it's been working. It's been working for 170 years. It's the reason why our clients stay with us on average 28 years. The industry I'm in, people average relationships with their advisors for 3.5 years. We are taking the time to personally plan for everyone we are looking or reaching out to or talking to. And everything is tailored specifically to what's going in your life, not only from a financial perspective, but also from a personal and goal perspective. If our plan isn't helping you achieve what you want to do, then we aren't doing a good job for you, and you should be working with somebody else. But I can proudly admit that our clients have been staying with us year over year because they've seen the work we've done. And to those who haven't reached out yet and looking to get a game plan in before the end of the year, now is the time to do it. Reach me at my cell, 602-909-9048. Again, that's 602-909-9048. I hope everyone has a fantastic Monday and a great week. I look forward to hearing back from some of you. And as always, thanks for having me on. It's always a pleasure and a privilege to be here. And I look forward to speaking and coming on next week.
There you have it. That's my son Joey, 602-909-9048. Get it done. This is, Jason, obviously the timing, right? We're hiring all these IRS agents, and of course now with troubles selling all the debt, the IRS saying, hey, guess what? We're coming after you. We're going to be, the enforcement hiring is going to continue to increase. And then, oh, by the way, the guys that, because there's a lot of people out there that, I'll call them the gig workers, because that's the new economy right now. Everyone's a gig worker. You kind of got to estimate your taxes, right? Now, you estimated, you know what, you didn't estimate good enough. Don't worry, though. We're just going to whack you for another 8%. It's absolutely outrageous. And again, I think the hard part for most of us and how this all shakes out at the end of the day in trying to fund all this debt, Jason, Taxman is coming one way or the other, right? Left pocket, right pocket. Your wife's purse, you hide it under the mattress. It doesn't matter. They're going to find you.
Yeah, and I didn't want to break in on the conversation early on, but Joey's discussing this really, really well, and you brought up the taxes, and he's like, yeah, the IRS are always coming in for their piece of the pie, and I think we should just tweak that. They're always coming in for the piece of our pie, right? They're not coming in for their piece. They're coming in for our piece. Our piece is the crust of the tie pin that just the pie tin that like is stuck to the side, right? You know, we don't actually get a slice, but there's that little piece of crust that's ours. They're coming for that too, Joe. This is why you got to watch out what you're doing for yourself, Joe.
Yeah, absolutely, and it's one of those things where, as we watch, you know, remember how they used to talk about balanced budgets, and we can't do this to our kids and our grandkids, and where's all that gone? Right? Where's that all gone? Instead, it's, we got to do it. No, we just got to keep spending. You know what? We're going to say we don't want to spend, but then we're going to meet in private, and then we're going to come up with a way that we can both spend. Of course, we're not Democrats, Republicans. We can both spend money, but then come out and say, well, but we won. Right? You know, and now the new thing is, hey, we'll trade some fake border security. By the way, speaking of border security, Rocky Point, Puerto Penasco here on the border of Arizona and Mexico, they're closing the port of entry because they need the port of entry people to help with all the illegals that are coming over. Now you can't even get in to Mexico starting today. Yeah, don't worry though. No problem. It'll be fine. We'll be back. Eight 800-951-0592. Quick look in here, Jason. The Dow's down 175. The NASDAQ down 200. The S&P's down 40. Gold's down 45. What a crazy day in gold. Yesterday afternoon, right around 4 or 5 o'clock Arizona time, when the Asian markets opened, gold went skyrocketing, hit a new all-time record high on the intraday, going up. What was it? About $2,140 intraday. Then it rolled into the U.S. We got gold right now profit taking here, and a lot of paper stuff. It's kind of funny because it looked like the Asian paper traders made the Western guys go long yesterday, right? Huge. Oh, we got to cover our shorts, and then they kind of returned the favor this morning. Okay, guys, you think we're going to make you cover your shorts? But I'm going to tell you right now, these expect this stuff. Expect it. Because unfortunately, and why do I say that? Because the markets really are trying to cling to. Somehow, we can print all the money they print, go into all of this debt, and 34 trillion that they admit to, plus 8 trillion on the Fed's balance. You got to add that. It's not like that doesn't count. Right? That's $42 trillion. No end in sight. And all that we're going to get is a little bit of inflation. That's it. That's the only price that's going to be paid. I don't think so. So I will tell you that I think 2024, Jason, will probably be a year of extreme volatility as they get more definition as to exactly what is going to happen. Because right now, everyone's just guessing. Are we going to have a soft landing, no recession, a small recession, a big recession? Is it going to be depression? Are they going to reprice gold? Are they going to reprice fiat money with digital currency? So many unknowns. This is why we talk about Joey. We talk about our friends over at YRefi, right? Up to 10.25% return. And you don't have to mess with Wall Street. Where do I sign up for that? I'll tell you where. InvestYRefi.com. That's the word invest, the letter Y, R-E-F-Y, or just call 888-YRefi24. because, Jason, I think we are going to see a lot of this. There will be days, don't be surprised, these bigger moves that we're seeing in the markets, I think that's what we're going to see. We saw a lot of this types of moves as we started approaching the financial crisis back in 2007, 2008.
Yeah, there's just a lot of big money interest moving their money, right, Joe? And some of them think that there's some buying opportunities, but most likely a lot of them are saying, hey, I need to get out, because when guys like Jeff Bezos and Jamie Dimon start to sell $1 billion in stock or whatever it is they sold, that wakes people up, Joe. It wakes people up as to being careful as to what you're doing. And yeah, I think the volatility will continue, like you said, and we'll see how it unravels as time goes on, because I think 2024, as we've been saying pretty much half of this year, that next year's going to be much crazier than the last couple of years. The next year's going to be a big one. It's all set up. The timing has been set for 2024, Joe. So we'll be here. We'll be here reporting it.
Absolutely. As we talked about with Joey, Fidelity, the nation's largest provider of 401ks, said that Americans are at it again, tapping retirement accounts. U.S. retirement plan participation took a hardship withdrawals in the third quarter of 2.3% in the third quarter. That's a 30% increase. And the number of people taking hardship withdrawals on their 401ks than they did just a year ago. The number one reason, and this is, you know what? This is a little different, because normally the number one reason, medical. The number one reason for the hardship withdrawals, according to Fidelity, avoiding foreclosures or evictions, and then, of course, covering medical expenses. So now it's not just medical. Now all of a sudden it's like, hey, if I don't tap this, I got nowhere to live, Jason.
Yeah, I think a lot of people are getting ready for those kinds of decisions in a lot of part of their lives, not just in retirement. And there's a lot of people making some hard decisions. And to me, with all of the aspects, all of the parts of what's getting ready to happen, Joe, I'm going to keep going. The most important part is the inflation. It's they caused a situation in the last couple of years. They're going to blame it on COVID probably forever. Oh, it's all COVID's fault. It's all COVID's fault. If inflation goes wildly out of control next year or the year after, well, it's still because of COVID. We had to print all that money because of COVID. It's all, and that's not it. The financial system was shutting down. It was breaking. A Ponzi scheme can only last so long, and so they got their eyes on the reset. Joe, it's why we talk about CBDCs and how they're going to change the world reserve currency from maybe partially the dollar with partially a bunch of others, kind of like the IMF's basket of currencies, and that's the future. And they'll do something, Joe. They're gonna attempt to do something, and usually the attempt, whether it's considered successful or not, ends up being really bad for the average guy, Joe.
Yeah, you don't make whatever they come up with. There's always that pain that needs to be paid, and you got to remember these are hardship withdrawals. So these are people saying, "Hey, I'm working."
Yep.
Right? It didn't say I got laid off and I need to take my 401k money. No, this is I'm taking a hardship withdrawal, but I'm still working here. I'm not making enough. Think about this. This was a third quarter number. They said that GDP, I didn't say it, Jay said it, GDP grew at over 5%. And we've got a 30% increase in the amount of people that needed to take hardship withdrawals. And this is kind of those things, right, where we're all left scratching our, because I think everybody out there agrees. Hey, there's stuff going on out there. Right? People are out there. There's no doubt. People are working. There's no doubt. But to Jason's point, it's just not keeping up. No matter what they say, the inflation rate is. Patriot Radio News Hour. Joe and Jason. We'll be right back. 1-800-951-0592. Quick look here. Gold's down $48, 2022, after hitting, closing at an all-time record high on Friday of, 2073, I believe it was. Then yesterday, early evening, Arizona time, gold was up in the, I'll say TV gold, it was 2152. Spot price gold, 2130. Obviously, new all-time intraday highs. We do have a rally in the dollar today, so the dollar, which has been getting creamed, a little stronger today. I think this is going to be pretty short-lived. Put it this way. The first price sheet I got today, and I've only gotten one, which is really weird, because of this kind of movement, you would expect more. Prices were up from Friday. Now, gold at the time was down about $20. But right now, Jason, I don't even really know where the physical markets are at, because I think a lot of the everybody and again, this is why we got, when we quote where gold is, that's a paper contract. These paper guys, they're doing whatever they're doing, fighting with each other and trying to make a dollar. But the physical markets are saying, hey, listen, we just don't believe you. We don't believe that gold's down $48, and you know what? We're not lowering prices. That's exactly what's happening right now.
Had a little bit of this going on a few years ago, right, Joe? When things were crazy in the news cycle and gold started hitting record highs, and as there would be days or a few months where it'd be down from those record highs, the gold price simply just wouldn't go down. So I think we're back in that time frame, and that probably means these premiums are going to start climbing again on gold and silver. And that means when you think, oh, well, shoot, it's down $40, this is going to be a great buying opportunity. Well, sometimes now here we are again where the gold goes down and the premiums just go up, and it's really done nothing. We really should somehow, there should be a way of pricing it in physical market outside of the paper market, but they don't want people actually getting that interested in gold, I guess, Joe.
Yeah, so right now, as an example, $20 gold pieces, $2,340, and I'm going to tell you, let's wait a day. And this is what we do whenever we sell gold and silver for a living. Let's wait a day. Let's see what the market does. So if we get, because I would love it. Let's get an opportunity to buy on this pullback here, because I actually, you know what, this is going to be a big week. We get jobs data Wednesday, Thursday, Friday. I'm not anticipating it being, I don't think it's going to be terrible, but it's not going to be really strong either. And I think we're going to see a continuation here. But I want to point out something. And this is going to be another reason why they're going to get rid of cash, in my opinion. According to the San Francisco Fed, they are printing, now here's what's interesting, 756 million new $50 bills. Now that was in 2022, but still they're circulating. First of all, notice they didn't print hundreds. Because you thought, well, shouldn't you be, if you're going to do it, let's just print hundreds, right? It costs half as much, right? I mean, 250s and say, well, nope, they're printing 50s. And here's what they said. Despite the use of cash continuing to decrease, they said that there's been a increase in demand for physical currency. In other words, people are taking money out of the bank and putting it under the mattress, Jason. And central banks hate that.
Right. Yeah, we have said it many times, Joe, that as they've taken over the economy, the Federal Reserve, they took the gold out in 1933. They took silver out after 1964. Took the copper out of the pennies in 1982, and now here we are in the last few years. They don't want the paper. Their own paper, their own money is too expensive. It's too much of a problem for them to have it floating around where they can't decide exactly what happens with it. And so, they don't want you. They're slightly okay when you deposit it because that puts it back in the system. They hate it when you withdraw it, and they don't like the trading and buying back and forth with it. But I don't know when things will change and if we'll ever go to just only digital currency, Joe. But they're going to make it very expensive and hard for you to use cash. If there is cash in let's say 10 years or 15 years from now, it's at a premium. Your privacy to use cash is going to be maybe a 10% premium. Every time you spend it, there'll be a 10% tax on it, Joe. And, so I don't think a lot of people in the future are going to be able to afford 10% of their money just to use cash. So cash will virtually be eviscerated.
Yeah, and I'm sitting there saying to myself the same thing, which is they don't need to ban cash. I thought they did. I did. They're going to have to ban it. No, they're not. Because the big companies are going to do it for them. It's just going to be that simple. One day, and again, it'll be banks. Because here's the banks. Here's what they now use for cover. By the way, you think I'm wrong? J.P. Morgan. We're going to close another 160 branches between now and the end of the year. I don't even know what the total is. They've closed 5, 6, 7,000 branches, all these banks getting rid of branches. What do you think really is going on? You need to wake up and understand it. And of course, they use, we don't know. It may be fraud, so we just don't want to deal with it anymore, right? And that's what's going to happen. Companies are going to say, we just don't want to deal with it anymore. Patriot Radio News Hour, final segment coming up. 800-951-0592. Joe and Jason on this Monday. I'll tell you what an interesting day. In the last, 16 hours or so, what a wild ride the gold markets have been on. And I think the big thing here is everything's in place. Right? I don't know how long this is going to go on for. As far as the economy is slowing, that's probably that's for certain. We'll get another look at jobs this week. My guess is we're going to get a lot of what we got last month, which was a big step down in that. Now Fidelity saying, hey, people are starting to hardship their 401ks because they're out of money. And it's just really weird how all of these things are playing out. A lot of paper games being played today, Jason. But I'll say this: the trend for 2024. When we look at these historical charts, I'm not talking going back decades, like real long-term gold charts. There's been a big pattern forming that's calling for another big breakout to the upside. Yesterday I saw, and these are just straight chart people, and if you're into these chart things, talking about $2,500 gold, Jason, is going to be the next target on these formations.
Yeah, I think gold's, especially the way the markets are looking like they're turning long term, gold's going to have a very steep uprise, and quite frankly, with the inflation that I know has not gone away, it's going to go up. Yeah, I look at long term charts. It's hard to believe that in 2009, the average closing price was $973. It's kind of hard to, that was in the middle of the housing crash. It didn't get to its high until 2011, but look at that. We're way past double to that now, and I think we're going to double up in a much shorter span upcoming, Joe.
Yeah, that's, when you look at, that's a great way of looking at it. Look how many times the debt is doubled. We went from 5 to 10, gold did well. Then it went from 10 to 20, gold did well. Now it's going from 20 to 40, right? Gold's going to do well, but then it's going to go from 40 to 80, and gold's going to do well again. And Jason, the size of the jumps in debt they truly are astronomical. I mean, it really is hard to comprehend how fast this thing is moving now.
Yeah, we're getting on the cusp of that 34 trillion, aren't we? It's almost counting as fast as the old gas pumps. I remember watching was it Leave It to Beaver, and he's saying 1 penny, 2 penny as he's watching the gas. That's how slow it was moving, as it's 25 cents a gallon or 20 cents a gallon, whatever it was in the 50s. And but yeah, it seems like the national debt is. I don't see how it doesn't get to 80 trillion by the end of the decade, Joe. If they continue with this line of reasoning. I mean, I was looking at the Biden. What did they got another 111 billion for the Ukraine war, and he wants another 61 billion.
Well, yeah, you got to add the two together. They want over 170 some billion dollars now. You got to remember, the Pentagon says they're out of money as well. Hang in there, 800-951-0592. We're going to heat something up tomorrow. Jason and I, we're coming right back with the Half Empty Cup.